To outsiders, Amish families appear poor, living without electricity, driving horse-drawn buggies, wearing plain homemade clothing. But the financial reality is shocking. The average Amish family retires with more wealth than most American doctors, yet they never attend college, never invest in stocks, and never use retirement accounts. Their secret? 15 spending rules that invisibly compound wealth while the rest of America drowns in debt. The savings. The Amish don't appear wealthy because their wealth accumulates invisibly. While Americans spend on visible status symbols, new cars, designer clothing, the latest technology, Amish families save the difference. The numbers are staggering. The average American household spends approximately $5,000 monthly on expenses. The Amish completely avoid car payments, insurance, utilities, entertainment subscriptions, dining out, and consumer goods. That's $60,000 annually that Amish families either save or invest in appreciating assets like land and business equity. Over a typical 40-year working life, this spending avoidance compounds into wealth accumulation exceeding $2.4 million before considering any investment returns. The Amish build fortunes not through earning more, but through spending dramatically less on things their culture defines as unnecessary. The inflation law. Americans fall into a predictable trap called lifestyle inflation. When income rises through promotions or raises, spending rises proportionally. Bigger houses, newer cars, more expensive vacations. The Amish reject this pattern completely through cultural rules that fix living standards regardless of income growth. An Amish carpenter who increases his income from $30,000 to $60,000 over 20 years continues living in the same modest home, driving the same buggy, wearing the same style clothing, and eating the same simple meals. The additional $30,000 annual income becomes automatic savings because cultural rules prevent lifestyle expansion. This fixed living standard operates regardless of prosperity. Successful Amish business owners who generate $200,000 plus annually often live identically to families earning $40,000, with the income differential flowing entirely into land purchases, business expansion, or community investments rather than personal consumption. The result is wealth accumulation that accelerates over time rather than remaining stagnant despite income growth. Every dollar of increased earnings becomes a dollar of increased wealth because cultural guardrails prevent the spending increases that typically consume American raises. The accumulation strategy. Land represents the foundation of Amish wealth strategy, not for speculation or investment returns, but as permanent family capital that appreciates while serving practical purposes. Amish families pursue systematic land acquisition that builds wealth across generations. The typical pattern begins when young married couples purchase their first small farm, often 20 to 40 acres, using savings accumulated before marriage plus family assistance. Over the following decades, they purchase adjacent parcels as finances permit, gradually expanding holdings to 100, 150, or even 200 plus acres. This land serves triple purposes. First, it provides agricultural income through farming or timber harvesting. Second, it creates space for multiple family homes as children marry, eliminating their housing costs while keeping families geographically unified. Third, it appreciates steadily over decades, with farmland values in Amish areas increasing 400 to 600% over 40-year periods. The multi-generational impact is profound. A couple purchasing 40 acres at $150,000 in their 20s, expanding to 120 acres by their 50s, and passing this to children creates inherited wealth exceeding $800,000 to $1.2 million wealth that never appeared in bank accounts but accumulated through patient land acquisition following cultural priorities. Investment network. One of the most invisible but powerful Amish wealth strategies operates through community lending networks that eliminate interest payments entirely while providing capital when needed. This system functions as informal banking that benefits all participants. When an Amish family needs capital for land purchase, business expansion, or major home repairs, they first approach community members rather than commercial banks. These loans happen informally through trusted relationships, with borrowers receiving funds at zero interest under the understanding that they'll provide similar assistance when others need help. The financial impact is extraordinary. A young couple borrowing $80,000 to purchase farmland from a community member instead of a bank eliminates approximately $48,000 in interest payments over a typical 15-year repayment. Period. That $48,000 savings allows faster repayment, earlier financial independence, and greater wealth accumulation. This informal banking system also provides emergency assistance during crises, preventing debt spirals that destroy American families facing medical emergencies, fire losses, or business failures. The dividend. Amish self-sufficiency generates invisible income that Americans must purchase through market transactions. Growing food, making clothing, building furniture, and performing home maintenance creates thousands of dollars in annual value that never appears as income but functions as wealth preservation. The typical Amish family produces 75–80% of their food through gardens, livestock, and preservation techniques. Annual value of this production ranges from $8,000 to $12,000 compared to what purchasing equivalent food at grocery stores would cost. Over 40 years, this represents $320,000 to $480,000 in food costs, avoided wealth that stays within the family rather than flowing to food corporations. Clothing production adds similar savings. Amish women sew all family clothing from bulk fabric purchased through community networks at wholesale prices. Annual per-person clothing costs typically run $50 to $100 compared to the American average of $1,800. For a family of 8, this generates $13,600 in annual savings, $544,000 over 40 years. The tax system. Amish families navigate tax systems in ways that legally minimize obligations while remaining compliant with laws, advantages that flow naturally from their traditional lifestyle rather than aggressive tax planning. Agricultural tax classifications provide the most significant advantage. In most states, farmland receives dramatically lower property tax rates than residential property, often 60–70% less. A 100-acre Amish farm might carry annual property taxes of $2,000 to $3,000 compared to $8,000 to $12,000 for equivalent residential property. Over 40 years of ownership, this differential saves $240,000 to $400,000. Religious exemptions provide additional benefits. Amish are exempt from Social Security and Medicare taxes when self-employed, based on religious objections to government insurance programs. Self-employed Amish business owners save approximately 15.3% of net earnings that would otherwise go to these programs. For a business owner earning $60,000 annually, this represents $9,180 in annual savings, $367,200 over a 40-year career. The insurance savings. Americans spend staggering amounts on insurance products the Amish completely reject through community mutual aid systems that provide security without premium payments. The wealth preservation impact is massive. Health insurance represents the largest savings. The average American family pays $15,000 to $22,000 annually for health insurance premiums, costs that Amish families avoid entirely through community medical funds that pool resources for catastrophic expenses, while individuals pay routine costs directly. Over 40 years, this generates savings of $600,000 to $880,000 per family. The Amish approach medical costs differently than insurance models. They negotiate directly with hospitals for cash payment discounts, often receiving 50-70% reductions on bills compared to insured patients whose providers pay inflated rates. Auto insurance averaging $2,000 to $2,500 annually for American families doesn't exist for horse and buggy transportation. Homeowners insurance is replaced by community rebuilding commitments. The total insurance, savings, health, auto, home, and life combined exceed $850,000 to $1.1 million over typical 40-year working careers. The education cost. American families face crushing education costs that Amish families avoid completely through community-operated schools, ending at 8th grade, a choice that generates enormous financial advantages despite seeming educationally limiting. College expenses represent the largest savings. The average American student graduates with $30,000 in student loan debt, with many owing $50,000 to $100,000 or more. Amish young people never attend college, entering the workforce or family businesses at age 14 or 15, eliminating not just tuition costs, but also 4 to 6 years of foregone earnings. The financial advantage compounds through earlier wealth accumulation. An Amish young person beginning full-time work at 15 has accumulated $60,000 to $100,000 in savings by age 22, when their American counterparts are just finishing college with negative net worth from student loans. This 7-year head start on wealth building creates advantages that persist throughout life. The utility profit. Amish rejection of electrical grid connection and municipal utility services generates substantial ongoing savings that compound into significant lifetime wealth preservation. Americans view utilities as unavoidable fixed costs, but Amish life proves otherwise. Electrical service costs American households $1,200 to $2,400 annually, depending on location and usage. Amish families eliminate this entirely through oil lamps, gas-powered refrigeration, and wood heat. Over 40 years, this represents $48,000 to $96,000 in savings wealth preserved rather than paid to utility corporations. Natural gas or propane costs for heating, cooking, and water heating average $800 to $1,500 annually for American homes. Amish families use wood harvested from their own forests for heating and limited propane only for specific appliances, reducing these costs to $200 to $400 annually. Total utility savings over 40 years range from $96,000 to $188,000 per household wealth that remains in family hands. The transportation represents one of the largest financial differentials between Amish and American lifestyles, with horse and buggy transportation creating hundreds of thousands in savings compared to automobile ownership. The average American spends approximately $9,000 to $12,000 annually on vehicle-related costs, car payments, insurance, fuel, maintenance, repairs, registration, and parking. Over 40 years, this totals $360,000 to $480,000, with many Americans spending significantly more through luxury vehicle purchases or multiple cars per household. Amish transportation costs are dramatically lower. An open buggy costs $3,000 to $5,000 new and lasts 20 to 30 years with proper maintenance. A quality